Hey, Mark.
Hey, Dwight.
Hey, Mark. How are you doing?
Yeah, not too bad. You?
I'm good. I'm good.
Okay, we can start in about five. Five.
All right. Cool. Cool.
I try and get this done fairly quickly. I want to do it about an hour.
All right. Cool. And I've got the live stream up on YouTube.
The what?
The live stream is
Okay.
on
Oh
YouTube.
yeah. Yeah. Um, Dwight says that I cannot start
Yeah.
my video. It says I cannot start my video because the host has stopped it. So I'm
All
trying
right, try again.
Okay, there we go. Hey, good afternoon, everybody. Welcome to the webinar. I'm going to get cracking right at the opening. Welcome to the third of the 4-day live trade execution webinar series. My name, again, is Mark Shawson, the pattern trader. For the last couple of days, I've been sharing with you how I identify huge moves in the markets only using price patterns and price action. So I'm always asked, do I trade the news? And the short answer is no. To me, the market is a discounting mechanism. The market is ahead of the news. Whatever we find out a week from now, 2 weeks from now, 2 months from now, the market anticipates this and starts moving ahead of it. And so what I try and do is just surrender to the will of the market. Probably the best thing to do is just show you what I'm doing, and then I'll go to the live markets and see what happened today. So these are my positions, my stock positions. This is not a demo account. I don't know if you could even mimic something like this. I assure you this is not a demo account. So I said for the last couple of shares, last couple of days, starting from a price level, I think of around 1,050, I started shorting Tesla stock. And today it hit about $880. So you can see that I came in today with a $70,000 profit. I also had a position in Airbnb. I was in a small loss, but Airbnb went high, went lower today. So I made about 15 grand on this thing. So, and then right before the market closed, I shorted Teladocs at $56 and just got out. This Teladoc is now trading at $35, under $35. So I shorted this just before 4 p.m. Eastern time. It's now just a half an hour later, and this stock's down about 40% in the aftermarket. I put a limit order in there. I got out for a fat profit and took my profits. But also intraday, we had a huge rally today. And so, not only did I not get out of my short position in Tesla, so I had about $120 profit coming into today, and then we had about a $50 rally. So, I wasn't frightened. In fact, I thought this was a great opportunity, and I used it to actually sell more. So I sold some shares at 908.5. I sold some shares at $910.63, and I sold some shares at $900 even. And it closed at about $881. I also added to my position of Airbnb. I sold it at $154.50 on the opening, and today closed at about $152.20. So I made a fat amount of money on Airbnb and Tesla, and then some nice money right on the close in Teladoc. So I was telling you that I'm long these call options in the UVXY. This is a kind of a call option on the S&P. It's an inverse indicator. These things will go higher as the S&P goes lower. I actually added to my position into a sell-off today. So even though the market rallied, I've been saying to you guys, I don't think this market is real, and I'm actually selling into it. And then I also, you can see here, I sold Teladoc right before the close at $56.78. And then on this particular trade, I put a limit in at 37 bucks. You know, the stock is just getting cratered right now. You can see that Teladoc is trading at $36.50 and it closed at $56. So literally got cut in half in about 10 minutes after earnings. So, you know, I take a look at some of these things and, you know, I've been very successful doing that. So then also on the FX side, I, you know, shared with you that I've been long dollar yen for quite some time. And I started shorting gold over the weekend, started advising our members to short gold. And based on that, I've got a nice little profit in gold and the dollar yen. So I'll just kind of go to the real-time charts now and share with you why I was doing what I was doing. So to me, it all begins with, you know, identifying what is going on a chart. And after today's webinar, I'll give you a link to my book, which will give you, you know, much clearer idea of my process in order to get higher, you know, closer and closer to a high value trade. So this is the chart of Tesla. And, you know, if we just look at Tesla, you know, to the, you know, uninitiated, this basically looks like a market that is going everywhere and nowhere, up, down, up, down, up, down, right? And so it looks like, well, we could go up or we could go down. So to me, when I, you know, when I see a series of price, you know, I look within the prices and see if I can't see patterns that are going to indicate when is going to be the next trajectory of a big move. And I'm always looking just to catch a piece of the middle. So if I see a nice double top here, I'm looking to take a piece of the middle of a trade as it goes from one level to the other. And that's my objective. That's why I look at the daily, weekly, and monthly charts. I'm always trying to find or extract the bigger moves in the market. I'm not in and out 10 times a day looking for, you know, $2 here and $3 there. I'm trying to take the bigger moves in the market. And so when I back out and look at Tesla, and maybe what I should do is put this up on a weekly chart just to kind of give you an idea of what's going on here. So this is the weekly chart of Tesla. And each one of these price bars represents 1 week in time. Now you'll notice that this is what I call a clean or a naked chart. There's nothing on this chart. There's no volume. There's no, you know, moving averages. There's no Bollinger Bands. There's no MACDs. There's nothing on this chart but price and time. And so from this picture, I try and extrapolate what's going on. So obviously Tesla has been in a big bad uptrend for a long time. The question is, where's it going from here? So, you know, as all good things in life, you know, good things end. Trends do end. And when they end with a pattern that tells you that the trend is changing. And I've been detecting these changes in direction for quite some time. And, you know, it doesn't all happen at once. It took a long time for this to go up here. And so it doesn't just, you know, drop out of the sky. It takes a long time to kind of sequence to then go in the other direction. But I do think, by and large, that is what is going on here. So what I'm seeing in the price chart Tesla is that, you know, you've had this uptrend. And actually, you started breaking this uptrend right here. And you had one more push, and now you're breaking back underneath this trend line again. Now, these trend lines are, you know, somewhat arbitrary. They just connect on the, you know, all of the lows. But to my mind, it kind of gives us an idea, you know, of a break in behavior. So there it is. So you can see the trend line connects there, or you can connect it to the recent lows. And so either way, this gives us some idea of what's going on, is that this has been holding to this trend line, but it's starting to now break under these trend lines. Now on top, what I see is a series of patterns. This is really effectively a triple top, where it makes multiple stabs at one resistance level. And now with the word top, we can, basically infer that if the market is topped, it's going to start going the other way. When, what time frame, how much, these are somewhat unknowable. But once we can start detecting a change in direction, then we can start trading accordingly. So again, I have anticipated that we are changing direction in Tesla. And so today, the market opened $50 higher. And so to me, this was a gift. Sometimes the market opens higher and the whole market was going higher and the Dow was up 500 and everything looks very exciting. But this is why, you have to know the cards you're holding. You have to know what is actually happening so that, when this thing opened higher, I just sold into that. I sold at $910, $908, and $900. So as this thing moved higher, I was just selling more. I opened my initial position there, and I just started adding more to my position here. And then eventually it closed close to the low of the day. Now we're having a whole bunch of fun in the aftermarket because Facebook is up about $25. You can see Facebook closed today at about $175, and it's trading at $201 now. I do an early morning session called the Boiler Room, and in today's discussion, I advised our members not to short Facebook going into earnings, even though it looked very appealing. It was already very oversold. So what I look for is energy in the market. So if I'm looking to sell, I actually want the market to go higher. And that's exactly what happened. Today, Tesla went higher and I sold into that energy. What you don't want to do is catch the energy, after it's dissipated and sell there. And so, I do think that Tesla, it's likely to be very volatile. But by and large, this thing looks like it's given up the ghost. And more recently, we had kind of a double top, head and shoulders right here. You cut through the neckline. And now, it's possible. Sometimes markets retest the breakout area before they go back down. And, anything is possible. We're kind of in no man's land right now. We're between resistance and support. We're kind of in the middle. But I do think that the price action is starting to suggest that this thing is rolling over and could be a huge short. This whole thing looks like a huge, it's what I call a distribution, where effectively people are getting out up here. And so again, it could just, bang here for a while. But on balance, I'm looking to short the rallies in Tesla, which is something I did today. I'll put the link to the book. No, the book has not been mailed. I'll put, see a whole bunch of discussion here. I'll put a link to the book after today's webinar. So everyone's talking about this book. I'm sorry I brought it up. I will put the link to the book after today. So that's really what I'm seeing on Tesla. I talked a little bit about Airbnb yesterday. I think this is also in the process of rolling over. I started getting short yesterday and then today, and you can see we're leaking to the downside. Now, this is a difficult, very choppy market environment. And, we're in these areas between resistance and support. We're like right in the middle. And so it's very conceivable that you can bang, in both directions. The volatility is incredible these days. And, so what I try and do is, what I did was, when this thing opened higher this morning, I sold into a higher opening. So I use that higher opening. This is what I talked about yesterday. Use that energy where I sell into strength and buy into weakness. So we opened higher today, and I actually just added to my short position on that strength. But when I look at Airbnb, again, I start seeing these, what I call distribution tops, where it just indicates that the market is forming these bear price patterns. You can see that it started off right here with a bear price pattern, this double top, makes a new high, backs off the high, retests the high, and when you come through the neckline, you basically confirm. So this whole thing topped out there. This has really been the governing price pattern. So I always look at the price pattern that is going to govern basically the trajectory. So there's obviously been in all kinds of fun in between, but to my mind, these rallies are just short covering rallies, and that basically this whole thing looks like a distribution top that is going to roll over and go lower. So you can see yesterday I said, once I identify the direction, the trend, the pattern, then I look for a bar that then puts the risk reward in my favor. So I talked about this concept yesterday of this inside bar. You can see yesterday, the range from high to low literally sits within the range of the day before. So we call that an inside bar, where the high and low of that day sits within. So what that tells me is that that's just a coil. It's just a building of energy. And so what I suggested to our members today was sneak a sell stop under the low. Use the market action to confirm that it's actually going to go lower at 152.5. And you can see it went through there. And basically, that's where it's closed. And so, this is where my risk would be, about this 159 area. So I use these charts and this price action to create these entries and a risk reward that I might not be right every time, but it doesn't really matter. I don't have to be. Because again, my objective is to take the bigger moves out of the market. And if I'm successful in doing that, then it doesn't matter if I move, lose a couple of, moves in between. And that's, the huge difference between what most people are doing, where they're trading for the huge difference between what most people are doing, where they're trading for too small an outcome. And that's why I use these bigger time frames. This is a daily chart. I'll also refer to the weekly chart, because what I'm trying to do is get hold of a move that is going to, go for a big ride. I just took out $20 on Teladot, shorted at 57, is trading at 37 right now. That's a big difference, taking out $20 out of a $57 stock, than to bang around every day and try and take $1 or $2 here or there 10 times a day. And then as I say that, I always get these comments, will you ever trade the 4 hour? It's quite amazing. I'm trying to, communicate a concept where I'm trying to take a piece out of the middle. I might not get all of it, but if I can take this piece out, if I can take a piece of the middle out and sit in that trade, rather than banging in and out, trying to fight some moving average or what have you, that's how you make money in the markets. I just showed you how I've been sitting in Tesla and I've got $130 profit in that stock. And I just actually added to my position. I didn't get out, I added to it. So this is a very big difference, and it's a concept that I try and communicate where, let's just take the FX market. Most people are trying to take, 5 or 10 or 15 pips out of the market. And if you're trying to take 15 pips out of the market, you got to risk 15 pips, which, in a market that goes up and down 100 pips a day, you're just asking for trouble. But this is, a one-to-one outcome. And then you got to also figure in the 2 or 3 pips that you have to pay the broker. So you actually need to make 17 pips. It's just a losing game. By trying to extract such small outcomes many times a day, you need to be 90% correct, over time. And so you can't do that. And that's not my opinion. You just have to look at the statistics, and 90% of people are losing their money in the first 3 months, certainly in the FX. I think that statistic's actually a lot higher. Instead, what I try and do is I won't take an FX trade unless I can see 150 pips, 150 pips, not 15, 150. I mean, here's my yen trade. I got in 126.61. I'm up, 180 pips on this dollar yen trade. So, unless I can see my way to making 150 pips, I don't even trade that market, which means, I'm not trading that much. So I'm looking for more of a quality move than just being in and out 10 times a day. So if you can set up a trade where you risk, or your outcome is 3 times your risk. So on an FX move, if I'm looking to make 150 pips, I'm going to risk 150 pips. And so even if I lose, all I have to do is win 1 of these and it makes up for 3 losers. So I can actually lose 72% of my trades. So I don't have to win 90% of my trades. And guess what? If I, go on a serious rump and I make 300, 500, I've made, 1,000 pips on an FX trade. That will take care of all of the losers. It's the same in a stock. I'm not just in and out for a couple of dollars. I'm trying to, see my way to making a piece of the middle here. I think this is going to go down, $20. And if I can take a piece of the middle out of this, that's what I'm trying to do. So Facebook is rallying now. It's now over 202. I actually sold it at 200. I put a sell limit because these rallies don't last. And so I'm just, I just sold into it. So instead of selling before, I'll wait till the after. Chris says, how do you actually enter a trade? Quite often a strong level will break when the stock will reverse the other way, like Facebook today. Should mention would drop line when, how would you? So I'm not really sure what your question is. So there's 2 ways to, that I would approach this. So first off, you have to identify what's going on here. So to me, this has been in a downtrend. You have a bearish price pattern. And now, yesterday we talked about it. I talked about this bar on yesterday's webinar, this inside bar. So now I believe that, this thing is going to go down and that my risk is really there. The high of yesterday or the high of the day before. That's where, I think if I'm correct, we really shouldn't see that risk. So my attitude is, if it opens higher, I'm actually going to sell into that strength because now my risk is much smaller, if that makes sense. I'm getting it at an area much closer to where my stop out is. So this is really my risk and that's my reward. Now, if you're super aggressive, you could do both. You could sell it into strength. And then, like I said, I usually try and confirm what I'm looking at by putting a sell stop. And basically you're better off by doing that because, sometimes it could open and, could keep going higher. So what you could do is put a pending order. This is what I instructed our elite members, our elite is, well, let me show you what that looked like yesterday. So this is what my daily email to those on our elite daily email list get, my trades and my analysis. So, and if you're interested in the elite program, after this webinar series tomorrow, one of our team members, you'll get an email, and then one of our team will get in touch with you. But this is what I instructed our members. Put a sell stop at 152.50 right under this inside bar. Put your stop loss at 159.50 and your take profit here. Now, those are my initial parameters. So once a thing gets going in my favor, I might just, keep on moving this take profit. I'm not going to stop it from making me further profits. And then I go on to, basically show them what I'm looking at and then give an explanation. So most people will focus on this. Did it win or lose? But this is not a signal service or a managed account service. What I'm trying to do is convey a way of looking at the markets that, to my mind, I'm very profitable doing this. And then I show you what I'm looking at, and then I write it here. And this is where the value is. Recently, Airbnb hit a long-term resistance line and is forming a double top right at the resistance line. Penetration below the low of the inside day bar will very likely be a catalyst for lower prices, etc. So this is what I said. So you can set up your orders two-way. I shorted into strength today, and you could also, if you want, put a sell stop under there and add to your position. So there's many ways of skinning a cat, of entering an order. First thing is deciding what is actually going on in a particular market, and then determining the risk reward. So it's all about risk and reward. Trading is, everybody says, well, getting in, when you get in, you think, well, how much you're going to make. To me, trading is all about identifying the smallest level of risk to get in a trade. And Chris says, okay, so here's the problem. I sold short Airbnb at 152.5, but it came back up quite high above the neckline. Is your stop loss very far away? Well, it was actually 159.5. I couldn't afford to have a stop loss at 159. So what that tells me, Chris, is that your position size is too big. So this is where, and tomorrow I'll share with you, we have a stock calculator, but you should equate your position sizes to 0.5% risk on your account. So let's say I said sell short there at 152.5, put your sell stop there at 159.5. So you're going to risk $7. That's your risk, right? So now in order to figure out, how many shares so if you say you can't afford it, that means your position size is too big. So let's say you have a $5,000 account and you want to risk 0.5%. What is that, 25 bucks? That equals $25. So that means roughly you could do 3 shares, right? If you sold short 3 shares, gets out, banged out, you're going to lose $21 or even less than 5%. Maybe you want to do 4 shares, whatever it is. The point is, you shouldn't say I can't afford it. If you say you can't afford it, it's because your position size is too big. So if you equate most of your position sizes to 0.5% of your account, even if you lost 10 trades in a row, that's only 5% of your $5,000, $250. You would live to fight another day. But most people are trading with too big a risk and too small a stop loss. So if you're trading the FX market with 15 pip stop loss, you're thinking, oh, I'm being a good boy, I'm putting a stop in there. But if you're putting a stop so close and you're getting banged out all the time, you can die a death of 1,000 paper cuts. And eventually you're just going to bleed to death, which is what happens. You just take a lot of little losses and eventually they add up. What I'm trying to say is take that loss there and go for a bigger objective. And almost nobody does this. And that's why almost nobody makes money. So Bruce says, wait, with a 10 grand account means your max is $50, so you can't trade options. Well, with a 10 grand account, you really shouldn't be trading options. But that's not true either. You can buy options for less than $50. But, options, certainly naked puts and calls, you have to be willing to risk every dime of your premium, 100%. So, Chris says, thank you. You answered my question perfectly. So thanks, Chris. So essentially, is it therefore better to do options? No, you should only do options with money you can afford to really piss away. It's better not to. You could sell calls, you could sell puts, but again, then you're exposed to unlimited risk. So options are a risk. So Chris says, I need to sort my position size. A position size calculator would be useful. My account is 30,000. So Chris, 0.5% of 30,000 is what? $1,500? No, that's 5%. $150. So if you want to risk 1% on a trade, that's $300. You're not going to get killed. So if you risk $300 in this trade and it was a $7 risk, you could do 20 shares. Are options inherently more risky than options are a wasting asset. 90% expire worthless. But there are times where you catch, lightning in a bottle. And, I would caution, if you really don't know what you're doing, do not trade options. I use options just to leverage a move that I think is coming very soon. So. Centra said, did you do options on Airbnb? No. Most of the time, the options are too expensive. And when the markets, get to be this volatile, that means the premiums expand, which makes it even more dangerous to do options. It means your leverage is even less because you've got to pay more for the option. So when I do an option, my mindset is that I need to see that this option can triple in value. And if I can, see my way to making a case for that, then I'll do it. And very often I'll lose 50% or 100% of that. But there have been times where I've just made enormous amounts of money. I'm up, 200% on these UVXYs right now. And, I've made thousands of percents. So, yeah. It's just like anything else. The quality of your wins, has to outnumber your losses. Why do you need to trade options when there's FX? Am I right or wrong? So I trade options on stocks. FX, you're right. It's already leveraged. But there are FX options too. if that's your bag. If you think a breakout is coming, but you're not sure if it's going to go up and down, you could play trades that catch it either way. Yes, that is true. You can do a lot of things. So basically what I'm trying to do, instead of digging into the weeds, is sharing with you a way to look at any trading instrument. I don't care if it's corn, wheat, the euro, yen, gold. I shared with you that I started shorting gold, or started advising our members to short gold. So what I'm looking at on the daily here on gold, so what I'm trying to share with you on these webinars is a way of looking at the markets. Instead of going down the rabbit hole and answering all these very technical details, what I'm trying to do is share with you a way of looking at price action, and only price action. So gold, it's about interest rates, it's inflation, it's monetary policy. There are 1,000 things that we could look at and analyze, with gold. But to me, I just look at a simple pattern, a price action, and then start seeing, does the market start respecting that? So sometimes you'll think you'll see a bottom, and then it starts, coming back up here. And so I look at how the market respects the pattern. So I look at the pattern, and then I make my play, and then I start looking, is the market confirming what I'm looking at, or is the market's, creating a trap here? And so that's the difference between, looking at patterns, in a textbook and in real time. Because we can always, look at patterns and say, well, you could have said this is a double bottom. Why isn't this a double bottom? Because this actually never came through here and confirmed. You can see, and then it's just started going higher. It didn't respect that double top. So by virtue of what something isn't doing, as well as what it is doing, will inform me of a decision. So you could say right here, this could have looked like a top. But you can see that it didn't come and confirm. It didn't go through this neckline, which is a line through the pattern. And then, like I said, if it starts disrespecting or not, observing what you think that pattern was, just by virtue of it doing, the opposite of what you think, it's going to do that other thing. So sometimes, just by virtue of it not doing one thing, it's going to do another thing. And so this time is a little bit different, because we now have gone through the neckline. So we have basically confirmed this. Now, sometimes you still get these fake outs where you get a thing and then it breaks out and it can go the other way. So you always have to be aware of what the market is doing relative to the pattern. Is the market observing the pattern, or is the market kind of fighting the pattern? Now, you could still get this up here and it could still die. So the market could take, much longer than you think. But I think this is the beginning of the end. It could have a couple of death rattles here, but I think it's the beginning of this thing starting to reverse. So this is a reversal pattern, which means that it'll get thrown in reverse. So this is the daily chart. And so, I like to look at, all of the pictures, all of the time frames. And this is what's happening on a weekly chart, where it's pretty early call to say, well, it's top, but, I can see what's happened here. Reverse at a major thing. Then it had another top here last week. It created this key reversal, made a new high, closed on the low. So on my email on Sunday, I suggested to our members to put a sell stop at 1919. And if you did that, you would have about $40 worth of profit in gold right now. And you can see now we're starting to crack under these lows. So the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're starting to crack under the lows for the last 10 weeks. And so we're starting to reverse. And we've got this line that we're very close to. So if we pivot back here, it could always go that way, but I think it's more likely to go that way. So again, all I'm looking at is a picture on a chart that tells me a story. And then I try and create risk reward scenarios. So if I sell it there, how much do I need to risk in order to validate that trade? Natalia says, if the risk is $300 for $7, then it's like 20 shares, Natalia, 20 times 7. I'm sorry. So yeah, 40 times 7 is 300. Yes, something like that. It's been a long day. Anthony says, what FX broker has XAU USD? None of them do. It became banned. These regulators determined it was in your best interest. Really what they're trying to do is protect the futures industry, but no, you can't do that. So you could trade futures, or you could trade GLD, which is not leveraged. It's just an ETF on the stock market, GLD, or you could trade the futures markets, but you cannot trade XAU USD. Raymond says, how do I get into the boiler room? Just send a message to our support team. I don't even know, to tell you the truth. I don't sell you guys anything. Honestly, don't know. So just send an email to support@thepatterntrader, Raymond, but thank you for asking. And then as an elite member, you're automatically in the boiler room. And so you'll get an email after this series on how to join the elite program. Zachary says, I realize using the inside to define your risk, but other than that, what is the significance of the inside? So to me, what the inside day bar is, it represents a coil. It represents a storing of energy. And then I typically can infer the energy is going to break out in the direction. So you can see right here was an inside bar. This is a weekly chart. So it doesn't matter if you look at the inside bar in a monthly, weekly, daily, whatever that time frame is, you can see that is a coil, but you can see where that occurred. So that occurred right on this trend line here. So, you know, we went down, we hit this thing, we couldn't go further below this thing. And now all you have to do is put a buy stop right above the high of that inside day bar, inside week bar, and then boom, this went from 1,800 bucks to 2,100 bucks. You would have had a $300 trade for almost no risk. So I just look at these bars as a storing of energy that's going to burst in the direction of the trend or the pattern. So you could see, you know, just this was in an uptrend right here. And right here, you had an inside bar right there. Small little, and I just look at those as just a storing of energy. And then you can see just the energy just uncorks out of there. So, you know, when I look at the key reversal and the inside bar, I look at those as sending me in the direction that's indicated by the pattern or the trend. So in this case, we were in an uptrend. Now I'm inferring that this is, you know, at a major resistance level. So to me, this key reversal is starting to suggest that this hit a resistance and it will keep, you know, going lower. So I don't just trade these inside day bars or key reversals in a vacuum. Every time I see an inside bar or a key reversal, I just get, I have to see what the major trend is or the major pattern is. Billy says, how many positions do you usually have at one time? I try and have as few as possible. I've got too many for my liking. You know, I'm a human being. I'm not a robot. So I like to just pile in one or two. So, you know, I've made my bed with Tesla and, you know, Airbnb. I mean, there's a million shiny objects you could chase all over the place, but I'm in too many positions for my liking anyways. you trade the higher time frames, but you take profits fast. So yes and no. I mean, I've been in Tesla now for 3 days and I'm up $130. So this has been a very banging environment, right? So, you know, the moves, especially being short, even though this market has gone down, being short has been very difficult. Because the market goes down, then it just explodes. So it looks like it's been going down, but it has not been easy. And so you can see we're just in this environment where the ranges, the volatility has been a joke. So, you know, these trades are, you know, everywhere and nowhere very, very quickly. So it really depends, you know, where I am in the trade and how much, you know, potential for that profit is. Some of these overnight trades, like I did Teladoc yesterday, I did Texas Instrument. What I'll do is I'll just trade the earnings. So I'll just trade the burst right after earnings. And, you know, yesterday I made like 15 bucks on Texas Instrument in 5 minutes. Today I made $20 in Teladoc in, you know, in 5 minutes. So those trades I'm just kind of using very opportunistically. But I would like to hang on to this Tesla trade. I don't know if it'll let me. You know, this might need more. So, you know, this may just need more sideways action. You know, typically when a market goes straight one way, you know, it doesn't just go straight the other way. It usually requires, so this probably would need another inside day. You know, the more work it could do, it might even have to go up and then do a key reversal here, and then I might take it again. So this is just this is like no man's land. You're really between, you know, resistance and support. You're right in the middle. And so this could bang, you know, both sides of the middle. So sometimes it's just the environment you trade in. Sometimes the environment you're in where the market is just directional. And then in other environments where it's just very whippy. And so, yes, I will, you know, get in and out of trades a little bit faster. If I get immediate profits, I'll just book half my trades pretty quickly. So every trade is different. Every environment's different. It's hard to, but what I'm just trying to do is give you an appreciation to how to make the analysis. So irrespective of this trade, I got in right there and it's right here. So those are what I'm looking for in the market. Do they come every day? No, but all I need to do is catch a few of these, you know, every once in a while, and I'm good. And that's really what I'm trying to share with you, is how to extract the big moves in the markets. And I expect to be in gold now for a long time. If gold keeps confirming what I'm looking at, I will stay with it. So I'm short gold, and I'll just add to it. So if this keeps confirming what I'm looking at, I will, you know, stay with this trade. So every trade is different. I know it looks like I might be getting in and out a lot, but I've been in FX trades for over a year. At this point, I only have some experience with FX and crypto, but this education. So Angie, you can apply this analysis to any trading instrument. Anything that has a high, low, and close, you can use this. And so whether you're trading FX or cryptos, it doesn't matter. You know, I've been telling you guys to short the euro. I think the euro is going to parity. You know, I told you the other day, you know, when it was at 108 that, you know, that it would be a good idea to short the euro, and here you are at 105. And it wasn't just looking at this, it was looking at just the entire picture. So this is a 15-year picture of the euro, which implies that you're going a lot lower. You're at a support area here, but you're going to go to parity on this thing. You know, I told our members to start buying this dollar yen right at this breakout at 110, and now we're at 128. So that's an 1,800 pip move. So you don't need too many of those. And this is for versus, you know, getting in and out every couple of days. I never understood this, where these markets make these gigantic moves and people are trading in and out for 7 pips. Makes no sense to me. I'm short Apple, Uber, Tesla, Google, and Microsoft, Nicholas. Yeah, I prefer to just be short the crap. Like I shorted Teladoc today, or, Roku, is on deck for tomorrow. You could probably short this going into earnings tomorrow. I'm going to be short before the earnings tomorrow. I don't like to advertise earnings plays because you can really get hammered. So Roku, you can see, has gone straight down, and I'm probably still going to short it into earnings tomorrow. So I would, I rather, short the garbage. Google, Apple, those are a little bit more problematic, but they do look like they're rolling over. Google, I think, made a recovery today. No, it didn't. So Google's, broken through major support. And, I do think you can be short this market, but there's certain things to be short. And so, I prefer to short the crap than the strength. So Apple's going to be on Thursday, but this does look like it's rolling over. The better one to me is Amazon, but I think you can be short anything, but you got to be careful. I mean, you see today, Facebook's up 30% in the aftermarket, or whatever that percentage is. This is the one, Amazon, that I think is going to crack on Thursday, tomorrow, after the. So I'll probably short Amazon going into the earnings tomorrow. But it's very dangerous to short earnings plays. This is what can happen. This is why I told everybody in the boiler room today, it's just, Facebook has been going down, down. Now I shorted right before earnings there, where you had a coil of energy. Now you've had a distribution of energy where the energy's gone straight down. So you don't want to be the last guy, to short it down there. So I, look at markets in terms of energy. So I shorted into that, surmising this was a top and that this energy, like Tesla today, was just a fake out. So I shorted into that energy. And that was the last earnings play where it dropped $80 right after the earnings. But now you have a situation where it dropped from $380 to $160 in a straight line. So, do you really want to be the guy shorting it right there? So I didn't think that was a good risk reward. Now it's popped up over $200. Now this is where it is tonight after earnings. So now you can use this energy to take it short again. So I look at markets in terms of energy. There are times to play it and times not to play it. So I'd be welcome. Ben says, what else do you consider crap alongside Roku? Just about everything. The whole secondary part of the NASDAQ has just been, you can take it out back and shoot it. I mean, stocks like Zoom, Twilio. So when I say it's the junk, it's not the first tier. So, but now even the first tier is being, so this is Twilio. You can see that this just is making new lows every single day. These have been on my list to, our members forever. I've been saying forever to short all of these things into every rally. This is Dash, made new lows, going to make new lows. Etsy, there's thousands of them. Basically, the whole NASDAQ is for sale, and it's going to get cut in half from here. So this is Etsy. This just looks like it's, it's going to get cut in half from here. This whole thing looks like a Head and Shoulders, and frankly, it looks like it's just cutting through this neckline now. So the whole thing just looks like it's just going to get dumped. But you need to find times where, the energy builds up, to short these things on a low and then you get a short covering rally, sometimes not so good. All right, I'm going to start wrapping it up. You guys are asking me to look at 1,000 charts. Really what I'm trying to share with you is a way of looking at the markets. So we can go and look at 1,000 charts, but I've identified, all through this week, start to, tell you to short the euro, short gold, short Tesla. This is what I've been doing on, real-time basis. I show you my trades. And so this is what I try and do. So in a moment, I will share with you a link to my book. There was one, let's see, obviously, do you mind look at Shopify? So I'll look at this. This is interesting to me. This has come down a ton. And, it still looks like it's got a long way to go. So, I just think there's a big bad boogeyman out there. These charts all look sick. And, I think there's, some kind of black swan event percolating out there because these charts all look broken. And yeah, you might get nice short covering rally. I mean, this is what you need to watch out for. I mean, this market, this went from 500 to 800, but it looks like a blip on this chart. Doesn't look like much, but just consider the risk. So sometimes, you kind of have to wait for your time to, go short because you can get really hurt. There's a time and place for everything. But again, if you just understood this simple, basic premise, once these reversal patterns kick in, then these things really reverse, is indicated by the pattern. And this is kind of like a preview of coming attractions for Tesla, because this is what I'm talking about. You can see that there was a kind of a long-term uptrend line. And you can see the minute we started breaking it. Now, sometimes you get a breakthrough and then you get a retest. And then when you make a new low, then it indicates that now it's game on. And so this is what's happening. This is where Microsoft and Apple and all of these things are. They're at this relative inflection point. Now you can bounce off here or you can do this. So I just I just try and be an observer. I try not to impose anything. I try and just draw my structures and then see, does the market respect that thing? Or so yesterday, Microsoft did a good job of bouncing right off this trend line as it's snuck a little bit below. This could be a little bit of a bear trap where people chase this and now it could go higher. But, if we start coming back down through here, that's when, you got to watch these areas. So I just look at the tea leaves, if you will, and then see how the market moves within these structures. Or that way. It could go either way. Raymond says, 3 days in, I've learned so much. I'll be watching Amazon tomorrow like a hawk. Thanks a million. You're welcome. Have you heard about McCarthy chip? No. Billy, fine. As an observer during the pandemic, were you going long? I was. So I will look, what I try and do is observe what's going on. To me, markets are going up, they're going down, or they're going sideways. Actually, there's two other variables. They could be going down and then changing to an up market, or going up and changing to a down market. So I will trade all four of these things. What I don't want to do is trade a sideways market. I'm looking for a move. I'm looking to take a piece of the move. So if this isn't an uptrend, I just want to take a piece of this move. Yes, you just want to get in sync with the trend. But, then you see, is the trend changing? Is this an up move changing to another move? Is this changing, or is this just a consolidation pattern that's going to sequence higher again? So it doesn't matter, it may seem like I'm always looking to go short, but I'm just looking at what the trend is and trying to get in sync with that. And then if the trend is changing, then that's going to create a new trend, a downtrend, and then I want to get in sync with that. And so that's really what I'm trying to do. Corey, you're welcome. So let me now leave you with the link to my book. This will clarify a lot more. And the great thing is it's a pay what you want. So this is my Freedom Trader Handbook. This will, go into greater detail about my 5-step method to line up a high value trade. And like I said, it is a pay what you want. So you literally can put 5, 10, 100, whatever you want. But the thing is, I will double that amount and give it to the American Childhood Cancer Organization. So this is not even correct. It says all proceeds. I actually take whatever you pay, I double that and send it to this great organization that helps kids. So I think I've given $34,000 this year. So every royalty that comes in from my website or these webinars from my books, I double that amount and I send it to the American Childhood Cancer Organization. So this is the link. I'm going to put it in the, Dwight, if you could put it in YouTube. Al says, you're the best webinar presenter. All I have to just sit on my hands, open my eyes. Thanks, Al. It's funny. I started this business. I've never kind of studied how to give a webinar or whatever. I just speak from the heart, and I've been looking at these charts for more decades than I care to remember. I could draw these charts in my sleep. So to me, I kind of can anticipate it. I've seen these things. I understand them. I understand where the traps are. I understand the price action, and so it's becomes somewhat instinctive. And so this is what I try and share. And I don't know that I always do the best job, because a lot of this lives in my brain. When I see something, it's, you can reduce it to something objective, but then there's, an instinct on top of it. So, but thank you for that. Will you be sending a recording of this session? No, but I think you can access this. But if you want, just, give our team support at the Pattern Trader. Send an email there and they will. So Victor says it's a bit difficult to follow. So this really isn't about, I think I gave you very specific reasons on why I shorted Tesla, the multiple bear price patterns that are in the stock, why I shorted Airbnb. So it's really objective. This doesn't have to be about putting your finger in the wind and seeing what happens. I basically look at it, see how prices, respond at certain areas. Now, this has been an uptrend, but, all good things in life end. So this has been an uptrend. Throughout this thing, you wanted to be in sync with the trend. Now, here again is an example of how you would say, well, why isn't this, or why wasn't this a double top? Well, it was. But first off, it never went through the neckline. And then, by it not going down, by it not doing this, meant it was going to do that. So sometimes I will do, one thing just because it's not going down, I'm going to get long. So now, this has formed a series of tops. And really, it kind of needs to go through 700 to confirm that. It needs to get through here. And if it gets through there, this thing is going to be a bomb. But it could always, grab a foothold and go the other way. And in which case, I will get long. So, but I don't think so. The way these things reversed at the top here tell me that there is some, serious pressure. So, I didn't want to make it sound like this is just a guessing game. Letitia, thank you so much. You're really doing good for a bunch of families. I've watched so many webinars on how to make money, and this feels real. I'm just a paper trader. May you receive the good you're putting out 100 times. So thank you very much. Letitia, tomorrow I'm going to ask you to put review on my website, if you could just say the same thing, I would really appreciate it. So I'll give you a link to my review website tomorrow. You can always check it out yourself, Mark Shaw's and Trustpilot. If you're interested in what we do, you can see what other people have to say. And I would really appreciate if you would also share your views. And I'll put that link up tomorrow. Victor says, my challenge in following you is that you're able to see the nuance of the patterns as opposed to the textbooks. So that is a thing. Real life is a little bit different than the textbooks, where again, in the textbook, you'll see something like this, and then you'll see the trade that goes like that and go, wow, that's what a double top looks like. I'm going to get short here. And this is what I did. When I was young, I would see something like this and I go, wow, I just saw this in a thing. And I just started piling in. Then I would get really opposite and go, oh, okay, it's going up. I go, this is even a better opportunity. And I would actually add to my position, and then I'd blow out my account. So what I've learned, and this is very subtle, is that I draw my structures and then I see how the market responds. At this point, I would have been expecting this, but the market was doing that. And so the market, my saying is the market is always right. Everybody has an opinion, but the market is always right. And so I always try and respect the market, see what it's doing, and surrender to the will of it. Maria says, thanks for the book. What an awesome, we'll study it next month. Orlando says, double tops are not infallible. They can go down. So yeah, this is where there was a double top, but it didn't work. And I'm surmising this is one also. And the only way we'll know is if the market confirms it. But, I got in a nice area here, so I'm going to get to hang out and, see if I'm right. Thanks, Greg. John says, I've watched Mark for a year now, cut off all the others, it's just noise. So thanks a lot, John. John's on all of these webinars. So thanks as always, John, for your, ongoing support. And I appreciate it. So Deanna says, I bought the book and it isn't downloading. Send an email to our support team. I'm sorry about that. I don't really control all of this stuff. I'm not sure why. I will talk to our team tonight and see if we can't rectify it by tomorrow. All right, guys, I'm gonna cut out now, and I will see you tomorrow. So it should be an interesting day tomorrow. We've got a huge move in Facebook overnight here. Facebook's trading at $208, and PayPal's up $5 in the aftermarket. It also had earnings, and Teladoc is down $21. You could have shorted at $56, is now trading at $35. So, but you can also get hurt. If you shorted Facebook, you would have been very hurt tonight. So, thanks, Mark. All right, I'm going to leave you here, and have a great night. Thanks, Dwight.
All right, Mark. See you tomorrow.